It's Matt from the Trade Brigade here doing a technical analysis on ticker symbol JWEL for Jowell Global. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will not be an update. We have not talked about it yet on the channel so far. So what we're going to do is come in and give ourselves a daily roadmap, if you will, just pointing out the most obvious areas of support and resistance. Then we'll talk more nuance as we drill down to the 30-minute intraday time frame. So that's kind of what I'm seeing for now on the daily. Let's actually scout for some support underneath us. Let's grab a little bit more time. Yeah, let's go with a year here. There we go. And what we're looking for is the next support underneath us, essentially. I would start to look at this as a very critical level here at 610, noting that we had prior support, then flip to resistance in here. Once broken, kind of did kick off a significant rally to the upside. The big elephant in the room is that this has a lot to do with the Evergrande situation here. So, if you're up on the news, maybe you can factor that into your analysis. But from a technical perspective, we do have a massive bearish candle here. Even the little bit of upper wick that we get, I mean, it was significant, right? At one point in time, as this was running higher, this upper wick, if that were to print as a daily bar, that's, like some of the most volatility we've seen in quite some time. If that printed as a green bar, it's bigger than the biggest green bar we have on our screen, right? So a lot of volatility in this name right now, but clearly closing very weak down towards the lows, but kind of at an area of support. So the question becomes, is it time to sort of jump on this and pick it up, quote unquote, on sale down here? Is this an overextension to the downside? Well, for that, it's all about your own risk tolerance. To me, I wouldn't try to catch the falling knife, especially not being too familiar with the Evergrande situation. However, I could see the reasoning for looking for a scalp long back up through 902. So if we do open up tomorrow morning and we can break that level to the upside, just basically coming from this prior support, which should now act as resistance because we are slated to be opening below, if we can break back up through that, maybe there's a retracement into some of these levels here on the 30-minute time frame. So with that being said, let's take a closer look and kind of see what's going on from that perspective. Firstly, again, let me just illustrate how this was weak out of the open. Looking at the first run higher, if it was going to be a solid run, we would have supported at the 38.2, the 50%, or the 61.8. None of that happened, right? Clearly, just big bloody candle slicing right through that thing, and it was a more bearish day, obviously. So we'll come in from the highs this time down to the lows of the bearish move. And what you'll notice here is that essentially anything that even bounces all the way up to 15, and I'm not saying this is going to happen, intraday tomorrow or the next day or whatever, but that does keep us in bear flag consolidation, giving us this type of pattern, right? And from that, we would expect, and I'll just draw it on the daily as well, from in here, we would expect lower, right? So because of that, I wouldn't push your luck inside of JWEL looking for something like this to come all the way back up to like plus 20 bucks. So if you're long from up in here, I don't know how much I would wait around expecting a move like that. For me, again, if you're looking to play the dead cat bounce, just the quick scalp up and over 9 again, what would be the level I would watch out for? Well, quite simply put, I would only be looking for about 1050 first, right? So, let's grab the other tool and try that again. First target would be here. And again, you don't want to overstay your welcome on a play like this, noting the strength of the sellers here. If we do get the pop, first target is here. I would sell like 3/4 or more of the position. And then if it starts to squeeze higher, that's where you trail your stop loss higher, break even, then you're back to here, trailing that stop higher. So if there is any sort of downturn, you get stopped out for either break even or profit, and you've secured that, $1.50 worth of, gains here inside of the stock if the dead cat happens in the first place. So that's how I would sort of look at this going forward. If it does continue on lower, I would wait for some sort of reversal pattern. So it could be an inverted head and shoulders, some sort of double bottom, but the next major area to watch, which we pointed out, is closer to 610. That's really going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.